The IRS is all over this like white on rice. They just got $80 billion last year to enforce more audits, more tracking, more collection of business owners and in cryptocurrency. And if you lie, you can go to jail. There's no easy button. I wish there was. I love Staples. I love that easy button. The side hustle is the method to save more in taxes and build more wealth and tax-free cash flow. The number one tip in saving taxes, I have been saying for years, is let's get into it. All right, first, number one, the IRS is all over this like white on rice. They just got $80 billion last year from the federal government to enforce more audits, more tracking, more collection for business owners and in cryptocurrency. They've got task force now that understand the blockchain. They can find your transactions. Oh, not on my, DeFi wallet. No, they can. It's on the blockchain. That's what is great about crypto is it's public. It's on the blockchain. Oh, but the IRS is not that smart. No, they are. They're that smart. So can I just show you the front page of your 1040 tax return? Okay, Jack, bring this up. This is the 1040 for 2023. Okay, see this right here? I don't know. Can I write on this? I might be able to write on this. Let's see. Nope, I can't write. Okay, let's look at here. After your name, filing status, look at the first question right here on your tax return. At any time during 2023, did you receive as a reward or payment for property or services? Or did you sell, exchange, or otherwise dispose of a digital asset or financial interest in a digital asset? See instructions. Okay, did you catch that? If you received an NFT or any crypto via staking, mining, reward, award, payment, anything, or did you sell any crypto? Yes or no? If you check the box no, okay, that's cool. Let's just go down here to under penalties of perjury, I declare that I have examined this return and accompanying schedules and statements and they are true or correct. Wow. So if you lie on your tax return, it's not pretty, people. Can you drop that now, Jack, please? All right. So the IRS is onto this. You've got to sign your tax return. And if you lie, you could go to jail. All right. Now, some of you are like, holy crap, taxes are due in 4 weeks. My 1040, I don't even know what I did last year on my wallets or in my exchange. Then file an extension. People, an extension is okay. You actually reduce your chances of an audit with an extension. Some of you are like, extension, that's a bad thing. No, it's not. Now you need to estimate how much you might owe, send in a little money. If you don't send in any money, there might be a little penalty or some interest on that. But if you don't file an extension, the penalties are 10 times worse. And if you file your tax return and it's wrong and you lie, then it's real ugly. So first point, if you traded any crypto last year and you think you cannot deal with it on your tax return, you're kidding yourself. I'm here to warn you. Now, you say, well, Mark, all my money's in crypto. I haven't sold anything. I've just been trading crypto. I don't pay tax until it goes back to US dollars. Wrong. Let me tell you the law. There are 3 ways your cryptocurrency is taxed. You buy cryptocurrency for, let's say you bought Bitcoin at 30 grand and now it's worth 72, 73. Your money doubled. You sell it and go back to US dollar. You're going to pay tax. You bought it for 30, you sold it for 70, you have a $40,000 gain. You're going to pay tax on $40,000. And if you only held the crypto less than 12 months, you're paying short-term capital gain, which could be as high as 39%, 37%. These are my brackets right here. You can look at our brackets. We have got to be extra, extra careful that we are not going to hit that 37% bracket. We might want to hold it 12 months and get capital gain, which could be as low as 15% or 0, 15 or 20. So number one, If you bought crypto and you have sold it in 2023 for any gain and you went back to USD, you're paying tax on the difference. Number two, well, Mark, I had Bitcoin and then I traded it for Ethereum. I didn't go back to USD. I just traded it for Ethereum. Taxable. Because whether you go to USD or you go buy a bunch of Ethereum, you got rid of your Bitcoin in that example. I bought it for 30, I sold for 70. I have a $40,000 gain. Well, I just exchanged it for Ethereum. That's the same as selling it. Now, if you don't hate the player, just hate the game. This is the game. You buy stock, you sell it, you pay tax. Well, I bought crypto and I left it in crypto exchanges or wallets. Doesn't matter. If you exchange it, you pay tax on the difference of what you bought it for and the current US dollar value the day you exchange it for another coin. Well, I did it in my MetaMask wallet. Okay, don't care. You're still paying tax. Mark, you have no idea. I do trades every day. Yeah, so you're going to need software. CoinLedger. CoinLedger is the number one software out there for individuals to plug in all their different wallets and get the reports on all of your gains and income for last year. And they do the DeFi wallets. They don't just do the big exchanges. Number three, you take any crypto of any type of token and you exchange it for services or buy something with it. Oh, you bought an NFT, taxable. Oh, I went and got some money out of an ATM, taxable. I used to go to a restaurant in San Diego, taxable. If you use your crypto to buy something, that's equivalent to selling it. So if you go back to USD, you trade for another type of token or coin, or you use it to buy an NFT or a service or product, you pay tax. I'm sorry. I know this is not fun hearing, but that's water under the bridge for 2023. And I can't save you taxes for 2023. It's over. It's over. Whatever you bought and sold in 23 is over. And if you just bought it in 23 and just sold it now, it's over. You have to call your tax advisor before you sell. If you just say you own a rental property and you want to sell it. If you go to closing and sell your rental property and then show up at your accountant's desk and go, hey, how do I save taxes? They're like, well, before you sell it, let's look at a 1031. Let's look at a charitable trust. Let's look at an opportunity zone. Let's look at an installment sale. Let's look at a DST. What? You already sold it? Well, what the hell can I do? You already sold it. Now, we might be able to salvage a little opportunity zone if you want to go buy some real estate. Now I've got to figure out how to offset your gain with other investments. We have got so many awesome freaking strategies. We'd love you to do your crypto transactions in a Roth IRA and never pay tax again. The charitable remainder trust would allow you to sell all your crypto tax-free and create a stream of income. We've set up hundreds of charitable remainder trusts for crypto traders. Have a consult with a real tax lawyer on Main Street that's affordable. Our tax lawyers are super affordable. You can meet with them anywhere in the world on Zoom. We'll have a strategy session and see what you need. But remember, this is part of your bigger equation. What are you doing with this money? Are you buying real estate? Do you own your home? Do you have a revocable trust? Do you have an S corporation? What's your day job? What's your side hustle? People, this is what a tax advisor should be doing for you anyway. Now, I have a certified tax advisor network. And any of you that are enrolled agents, CPAs, accountants, tax lawyers, financial advisors, and you want training on how to be a certified tax advisor and provide advisor services, I have a 12-module training program. One entire module is on crypto, NFTs, metaverse, staking, mining, trading, capital gains. All of that is in a section. So if any of you are looking for a certified advisor in my program, you go to markjkohler.com and you can find one right now that's taking clients. And by the way, I don't make any money. I just give the network away. I want people to find, I'm a matchmaking service and I don't take any money from it. I'm taxmatch.com. I want great tax preparers hooked up with tax filers. Let's get you some help. For any of you that are looking to become an advisor, one of 12 modules is just crypto. Whole module on real estate, whole module on asset protection, 4 modules on tax planning, entities, the whole 9 yards. Check it out at markjkohler.com. All right. Now, let me just hit a couple other points, and then I'll take your questions. It's a big topic. Our Crypto Tax Summit is a full day at the Crypto Tax Summit. So what I'm going to show you here is what I call the trifecta. The trifecta is where we organize your transactions. If you're doing mining or any type of staking that is not custodial staking, so staking, mining, or I'm going to put some meta ventures. You're going to want to run that through an S corporation because that's ordinary income. That's how it works. If you don't, your taxes are going to be close to 45 to 50% on the first 100 to 150 grand. That's your tax rate if you're mining, staking, or doing meta ventures. Now, if you're holding crypto, all right, now I'm doing custodial staking, I'm buy and hold, I'm trading. That goes on the right side. Now, we might use an LLC for asset protection, or we just hold it in our revocable living trust. This all comes down to your 1040 and nets together. So, people, if you're holding crypto, we're going to be over on this side. And this is where I'm going to put your NFTs. All of your coins, tokens. All right. So we've got to decide, are you doing operations with crypto or are you doing holding with crypto? And a lot of traders are doing both. I'm doing crypto mining and I'm going to pay higher tax rates on that. But as soon as I get my Bitcoin from my mining, it comes over here into a bucket. So you want to make sure you understand those differences. Now, the last thing I want to point out is NFTs are a whole other animal. And anybody that's doing crypto gets into NFTs pretty quickly. It's really the future of so much of our technology in this country. The blockchain technology is off the chart, NFTs. There's 2 types of NFTs. There's collectibles, and then there's utility NFTs. If you buy and sell a collectible, you have to pay the tax rate on collectibles is 28%. It's not pretty. If you buy and sell a utility token or NFT, then you can either get short-term capital gain or long-term capital gain, which is going to be a lower rate based on your bracket, and long-term capital gain could be 0 to 15 to 20%. In all these situations, you also have state tax. And if you go, well, Mark, I have my, you take that. I have my server in Nevada, or I set up an LLC in Tennessee, or one of my 9 tax-free states, Washington or Florida or Texas. So I don't pay state tax because that's where my LLC is or my corporation. Whoa. You live in California. You live in New York. You live in Illinois. You're going to pay tax in California. There's no way around it. You can't set up a Nevada LLC and think you're going to get around it. You won't. California is all over this, and they have been for years. So it takes some planning. I am sorry to be the bearer of bad news. So get informed, get educated, because you're going to be more educated than your tax advisor with training at our summit. And any of you tax advisors out there, we got to know this. Now, I love CoinLedger. I'll say that again. CoinLedger is a good resource to start getting the data for 2023. File an extension, 4868. Get on my network and find an accountant, an advisor that can walk you through this when it's time to do your taxes. Let's talk about getting out of debt. Now, an important concept here is there's productive debt and reductive debt. Now, this is where Dave Ramsey and I part ways a little bit. And you know what? God bless him. He has changed the lives of millions of Americans, helping them get out of reductive debt, which is bad debt. Credit cards, student loans, car loans, maybe even a home loan, a debt that doesn't make us money. We don't want debt that doesn't build our wealth. We can get into debt because of an emergency. We can get into debt because we got to pay off other stuff and we consolidate, and all of a sudden we're down a rabbit hole and it's hard to see the light. So that is the debt we want to get rid of. But do you want to buy a rental property? Do you want to get a business loan? Do you want to get debt that can make you money? And I think debt to buy a home so you're not paying some landlord is not a bad thing. And then we want to pay down that home debt as fast as we can. That's productive debt to me. So I don't want you to think the sky is falling if you have some sort of debt. We got to analyze it. That's step one. Now, step two, do not cut up your credit cards in this process. We want to pay off credit cards as quickly as possible and then use them for maybe $50 every couple months, pay them off. Now, some of you may have the self-control to use those credit cards more regularly and pay them off at the end of every month and build points. I love freaking building points, taking advantage of the credit card companies and turning it on them. Points are tax-free. So if I can turn in points and travel and all that, don't get me started. I love it. But also, when we're in the hole of debt, it's a loaded gun. We don't want to play with it too much until we get it really under control. So I would recommend to any of you that have credit card debt that you're struggling with, let's get out of debt. Not cut up the credit cards. Because when you get out of debt, guess what's going to happen to your credit score? Man, your credit score is going to rocket. And we want a good credit score because we want to buy assets that make us money. We want to buy rental property and a better home and maybe get an SBA loan and start a business and all these other things that require a credit score. Having a credit score is not a bad thing. Having a credit card is not a bad thing. We just got to use it wisely. So let's analyze our debt. What debt do we need to get out of? Let's not cut up the credit cards. Let's have a pragmatic approach. And then we're going to implement the debt snowball. Now, some of you have heard this term thrown around. So many different financial advisors around the country, even Dave Ramsey, of course, himself, teaches the debt snowball. It's super simple. And this is good review for all of you. I had to review the debt snowball equation myself before we started this live because it can seem a little odd. You know, don't I want to pay off my credit cards that have the highest payment? Don't I want to pay off the credit cards that have the highest interest rate? Well, the answer to both of those is no. In the traditional debt snowball, which I am a firm believer in, once you find that reductive debt that we're going to get out of as fast as possible, and I wouldn't start with your home loan on that, or maybe even a fat car loan. Let's get rid of the credit card debt first. Because where we're going today is I want to get out of debt first. And then we're going to take that money we've been throwing at debt. Oh, and we're going to ramp up that Roth IRA. We're going to ramp up our savings because the wealthy at age 40, 50, 60 years old, they're living on tax-free money. The smart ones they've done it. They built that nut. They're growing it. And I want you guys growing it. And the younger you start doing it, the better. And for those of you that are listening to this that might be 40, 50, or 60 years old, it's never too late to get started. You can always get started. And I'm not going anywhere with my weekly podcasts, my articles, my workshops, my blog articles. I'll be there for you. I'm going to continue to work my retirement account and my wealth and real estate and investments just like you are. So we're all in this together again. Now that's where we're going. Okay, so you got your reductive crappy debt. So what you're going to do is make a list. What's all this debt? And you're going to list it from the highest debt amount to the lowest debt amount, on a spreadsheet. Now, spoiler alert, I'm going to give you the link here or the procedure to get a free debt snowball video where I go through this in detail and a spreadsheet already built for you. So you can plug it right in. Does the math for you. It's free. I have a weekly newsletter. That's all I ask is start following. Start drinking my Kool-Aid, man, because I'm going to make you rich. All right. So what we do is we list out those debts, high to low, and then we're going to tackle the smallest debt first. I don't care about interest rates. I don't care about minimum payments. I care about the least debt, the lowest balance debt first. And then what we're going to do is make minimum payments on all the ones above it. And then the smallest debt, we're going to make a commitment. We're going to say, you know what? I could do $50 a week. I could do $200 a month towards that. You're going to pay yourself. You're going to make an investment in yourself. And we're going to talk about where to get this money here in a moment too. There's a bridge between getting out of debt and making $1 million in your retirement account. And we're not talking Wall Street. You can invest this money wherever the freak you want. So don't think when I say IRA or 401k, I mean Wall Street crap. You may want ETFs and mutual funds. We can go there, but it's bigger than that. It's a lot of options. Okay, so we're going to get there. So you're going to commit maybe $100 a week. That could be $500 a month. Some of you may go, Mark, I don't have $500 a month. I'll tell you where it's at. You got it. I'll show you. But it can even be as low as $50 a week, $200 a month. So what you're going to do is make your minimum payments on all those debts above that small one, add $200 to the equation, bare minimum, to that last minimum payment, and you're going to double down. So let's say that minimum payment's $50 on that smallest debt. Now we're going to make a $250 payment. Boom, 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 boom. You might pay that debt off in 3 months. Maybe it's a $750 little crappy Visa. It could be a Macy's card. It could be a Home Depot card. I don't know. Some little crappy credit card you picked up along the way. That could be the lowest one. It may take you 6 months. So you're plowing $250 every month for 6 months at that debt. And the minute it pays off, you celebrate, maybe a little Taco Bell night, something simple. I don't want to get crazy. You're going to go out and celebrate and go, I paid off the freaking credit card. And then you're going to take that $250 and combine it with the next debt up. The next debt up there might have a minimum payment of $75. Now you're throwing $325 at that debt, the $250 plus the $75, because you've been making minimum payments along the way. So you got the $325 blowing down that second debt. Then all of a sudden, 6 months later, 4 months later, 8 months later, that one's gone. You celebrate, maybe a little Red Lobster, maybe a little, Olive Garden. Let's get out there. I love those breadsticks. Get out there. And maybe it's because it's January and I'm not eating carbs. So I'm thinking Olive Garden breadsticks. But you're going to take that extra payment and apply it to the next debt and then the next debt. And then all of a sudden you start feeling confident. You're feeling proud. You're feeling positive. And boom, most debt snowballs create complete debt-free in less than 2 to 2.5 years. Many times 18 months. Sometimes take 3 years. We've seen incredible stories. And this is where I love, again, last plug I'm going to say is Dave Ramsey's debt-free days and people celebrating on social media going, I'm debt-free. Now, that may not mean your home loan. That's okay. I want you out of debt of all the crappy reductive debt. That could be that student debt hanging over you as well. Now, here's the transition. Let's say by the time you're on your last debt, you're like, holy crap, Mark, I've been throwing $3,000, $2,000, $1,500 a month at all this stuff. Woo! Now I got $1,500. I'm going to go get that BMW lease I've been looking for. Whoop! Slow down, Tiger. We are not going to go get a new lease on a luxury vehicle. We're going to take that $1,500 and shift. You've been living frugal. You've been getting out of debt. And now you're going to live like the millionaire next door because you're going to take that $1,500 and shift it over to plowing it into investments. Investments in maybe buying your first home. Investments into building a business. But at least $500 a month into that little retirement account called a Roth IRA. That Roth IRA could buy crypto. Boy, crypto's rolling this week. I'm loving it. You could be buying real estate. You could buy gold, silver. You could buy stocks, bonds, mutual funds, ETFs. It's all available. I've been teaching self-directing your retirement account for years. So don't think it just means open up a Schwab account and buying something you totally don't even know what it is. So you're going to take that extra money that you've been doing and using to pay off debt and just start plowing it into investing. Now, I was doing some math here right before we started. And if you take that $500 a month from what you were using to pay off debt. Now, I've got another way to find that $500. We're going to come to it here in 1 minute. Then I want to answer your questions. We can talk tax, wealth building, legal, setting up entities, suing your brother-in-law, whatever you want. I'm a tax lawyer. I got you. But this fundamental principle is what's going to set you free. So that $500 a month, if you're anywhere between age 25 and 30, by age 60, you're going to have over $1 million tax-free. Set it on autopilot. You know, it's funny, Jack, my director here, I was walking down the hall. He's like, you got to go live. And you know what I was looking at? My acorns, my little acorns. I love acorns. Acorns is an app that, and we ought to put an Acorns link in there too for people to sign up for Acorns. I'll send that over to you right now. I love Acorns. I'm full transparent. I got my Acorns. I just put $50 a week in my invest and $50 a week in my later. And right now, over the last year, I've built up $11,394. I don't mind saying that. That's my little acorns that, you're like a squirrel putting away acorns. Do you get it? It's kind of cool. Okay, so you're going to use your acorns to build some wealth and just track your income and go there. Jack, I'm sending this over to you now. Here's the link. Pop that link into our chat. Now, when you sign up for Acorns, you get to set that amount you're going to put away. And it could be out of sight, out of mind. You can round up to the nearest dollar when you're at 7-Eleven or Circle K. Go to Walgreens, go to Walmart. You round up to $1. It goes into your retirement account and you don't even see it. About $40 a month goes into my Acorns, just rounding up. So you're putting away a fixed amount, maybe $25 a week. Boom. And you're getting started. People, you don't have to be rich initially to get rich. Everybody that's rich didn't start out rich. They got there over time. And so as you pay off that debt, we're going to reallocate that money to building our IRA, to building our Roth. And just $500 a month, 30 years from now, you'll have over $1 million. And you hear all the experts talk about this all the time. People, don't worry about these influencers that are talking about being a billionaire and you're going to have $10 million. And people, it's so out of touch for me too. I'm not one of those types. I'm about slow and steady wins the race. I'm not the rabbit running around with their heads cut off. I'm just the turtle plugging along on the path, doing the basics every week. And I love my little Acorns app, just going there, boom, 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 putting money away. Now, where could you find another $500? Maybe some of you are like, Mark, I'm not in debt, but I don't have $500. Let me give you some kick-ass stats here. Do you know 45% of working Americans, this is over 50 million Americans, have a side hustle? I have multiple sources of income. I could very well fall into that category because I've got multiple sources of income. I'd say I got side hustles. I might have 2 or 3. Over 20% of those have with a side hustle make over $1,000 a month. The average time spent in a side hustle in America, of this group that I'm talking about, 5 to 10 hours a week. That could be one day out of the week on the weekend. It could be 1 to 2 hours a day at most. The average side hustle income is $688 a month. Now, let me give you some numbers. What are these side hustles? It could be Uber, DoorDash, selling a product online, doing Turo with your car, renting out your car on the weekends, Thumbtack, being an affiliate, Etsy, Rover. What were some of the others, guys? I mean, we got all sorts of good stuff. I mean, you could be making money on Upwork, Etsy. Get out there and sell a product online. What was the average income on Etsy, what were you saying?
Almost all of them are
$20 to $30 an hour on almost all these. And if you do the math, 1 hour a day gives you $500 a month. Now, for those of you that start to get a little more creative and you start selling products, ebooks, creating a little digital product, and you're out there learning how to do this, this is where the real money's at because you're making money while you're sleeping. Now, what are we going to do with that money? Are we going to go out and buy a bigger house, get a Range Rover, go get a Beamer? No, we're going to plow it into savings. We're going to save money before we spend it. And people, all of a sudden, you get addicted to getting rich. And getting addicted to getting rich is freaking fun. It's awesome. And it's doing the little things. I'm not out here telling you to go out and start a new business and invest 50 grand. And by the way, there's no boot camp of mine. I'm selling for 10 grand in Vegas. I don't want you to do not give me any money today. I do not want any money. I want you following, learning, drinking the Kool-Aid, getting on your American dream path. Let's make 2024 freaking awesome. The American dream is real for Main Street America, and that's you and me. We don't have to be uber rich. We can be comfortable. So let's get out of debt. Let's analyze our balance sheet. What does our debt look like? The good debt and the bad debt. Let's not cut up our credit cards. Let's build our credit. Let's build a debt snowball. Start getting out of debt of the crappy debt we don't need. Then reallocate that money we're spending on debt to saving and investing. Final key to this equation, keep learning. Keep learning. Get some good podcasts you love. I'd love you to listen to my podcast, Main Street Business Podcast. We're talking about Main Street business. I would love all of you have a side hustle that freaking changes your life and the next generation's life in your family. Leave a legacy. So powerful. So that's it. There's no magic sauce here. No secret sauce that just, whoop. There's no easy button. I wish there was. I love staples. I love that easy button, but it just doesn't happen overnight. We got to do these little things just over and over and over again and make it a habit. This year, it is estimated over half of working Americans have a side hustle. That's a 1099. That's a little business on the side where someone's paying you to do something out of your regular 9-to-5 job or day job or night job, if you will. You're out there earning money in some other way. Now, by the way, this is the gateway drug to the American dream. The side hustle is a small business. It is. And I want you to embrace it. The side hustle is such a wonderful way to break out of the insanity of just trading time for money and working for someone else. Not that that's bad. I have many clients that keep their technical training from a great college experience or vocational training or a career path where they're getting paid great money or reasonable money for their day job career. That's fine. You got benefits, maybe you and or your spouse. Love it. I'm okay with that. But if on the side we can build that side hustle and make more money, we're going to pay off debt. We're going to start saving more money. We're going to invest in assets that start making passive income. People, the side hustle is the method to save more in taxes and build more wealth and tax-free cash flow. We want to build cash flow so that we're not working our butts off every day. So, my friends, that's the beauty of the side hustle. I want you to embrace it, understand it, have passion for it, and go for it. So, the 5 basic steps to begin with. And these are categories more than, there might be 20 or 30 things to do here, but I put them in 5 steps. Number 1, launch the right side hustle. That's number 1. Now, there's really kind of level 1 side hustles and level 2 side hustles. Level 1 is Uber, DoorDash. Maybe you're doing some consulting on Upwork. You might be making $100 to $200 an hour on Upwork as a side hustle. It's a great website for you to kind of sell your services if you have some technical training. Uber, DoorDash, we get it. And I've got college students that in our local area, level 2 DoorDash, they're making $30 to $35 an hour in the evenings and weekends doing DoorDash. That's great. It's wonderful. And I'm hoping any of you that are on a level 1 side hustle, you're taking that money and you're getting ready to go to level 2. You're getting out of debt. You're using that money not to just live week to week, month to month. And I know, it is tough out there. The cost of living has gone up dramatically. Wages are stagnant. People are struggling. My son here in the studio has been talking to me about just this ongoing, suffocating feeling of our economy and so many middle to lower income, which you don't feel low income, but if you're making less than 100 grand, you're like, I'm broke. You're living week to week, month to month, and it is brutal. So you're doing this side hustle to make ends meet. That's level 1. It's okay, and I get it, and I can save a lot in taxes on that because that little Uber side hustle, DoorDash, selling consulting services on Upwork, that's a small business. So I want to write off cell phone, home office, auto, dining, travel, all sorts of goodies. And we're going to pay less tax on that money. That's good. That's good. But that's level 1. Level 2, and this is how you get wealthy, is that side hustle has to allow you to duplicate yourself or sell a product or service in the middle of the night while you're sleeping. That's when you start to build real wealth because now you're not trading time for money. You're taking your time and building something that you can sell when you're not there. Now, let's do a couple of quick examples. Let's say it's janitorial or landscaping. I've got a client that does landscaping, and he's got 2 crews. They do sprinkler systems and new builds, and they do lawn maintenance. And then he's also got 2 crews that do cleaning for Airbnbs. One guy, he and his wife, wonderful couple, I love them. And they've got 2 crews out there every day cleaning Airbnbs and 2 crews working on homes. Now, he could do it all himself, the landscaping, and charge X. And his wife could go do all the cleaning and charge Y. But now, if they have got 2 crews cleaning homes at $300 a house, and they're doing 2 houses a day with 2 crews at 4 different homes at $300 a home, whoa, now I'm bringing in $1,200, but I'm only paying my crew $600. So if I can get a 100% markup on services I'm providing, I'm making money when I'm not there. Now, is it a challenge? Sure. You got to hire, you got to fire, you got to make sure your crew's where they're supposed to be. There's going to be administrative costs. But now you're not cleaning homes, you're managing cleaners, and you're making money even when you might be at the soccer practice of your kids. Now, you could, and that's the same with the landscaping. Number 2 example. This is my daughter, Allison. I want to give her a shout out. She sells product online. She's been doing it since she was 14 years old. She would go buy used clothing, put it in the driveway, drive over it a couple times with my car, and then sell it online and call it the Urban Outfitter version. I'm more of a rural outfitter, Walmart. But anyway, she would take clothes, drive over it, and sell it. And she'd go into my closet and look for any old AC/DC rock band shirts from the 80s and resell them. And I'd be like, where the hell did my shirt go? Oh, well, I didn't know you wanted it. Yeah, I wanted it. And she'd sell it. But she's been selling clothes online for years. Now she's selling patterns online. So she'll find, and she's went on to school and learned how to be a designer and sew clothing. And so she can take patterns, show how to do them on YouTube, and sell the patterns with her YouTube videos online in the middle of the night. She is making money online in the middle of the night. That's how we start to build wealth. The next video I'll shoot is on scaling. But the first one is, let's just choose the right side hustle. And level 1's okay, but let's be thinking while you're driving Uber or you're out there doing that consulting or driving DoorDash, you're thinking, I can do this better. What's my next side hustle where I can duplicate myself or a product or service and sell it online? Now, it's going to take some time. It's going to take some development. You should be watching Shark Tank every freaking night, thinking of ideas, but don't be beating yourself up. Take time to develop this idea and something that you're passionate about, something that you can make money at that you love. All right, now I'm going to be fielding questions here in a moment. I'll give you some additional resources. I'm not going anywhere here. Every week, we're helping small business owners around the country get structured. But it's not setting up an LLC first. It's not opening a bank account first. It's deciding your plan. What is that side hustle going to be? Now, number two strategy or step, the basic steps. Okay, you want to go just do level 1 and take write-offs? Great. I'll help you all day long. You want to go drive Uber, take write-offs, and put that money in the bank and pay off debt? That's great. You want to make money? I think that's why you're watching. Now we got to do step 2. You're going to develop side hustle level 2, and you're going to write a business plan. A 1-page business plan. And you can get online and look over and over at all sorts of business plans and watch videos and do it. But don't pay anybody to do a freaking business plan for you. And don't think it has to be 30 freaking pages long. Just write up a page. What am I going to sell? For how much? Who's my competition? How am I going to produce it? How much is it going to cost me to produce it? How am I going to sell it? And a timeline here. What's it going to take? 1 page. That's all I'm asking for. Bring me 1 page. Don't try to do it online, or don't let AI do it for you. Don't pay someone else to do it for you. Take a real pen to real paper and pencil it out. Did I say pen? Take a real pencil and put it into paper and pencil it out. What are you going to sell? For how much? How much is it going to cost to produce? How are you going to produce it? And what's your marketing plan? That's it. Well, I talk to so many people that have a small business idea. I'm like, show me a 1 page. What do you got on it? Well, I got this great. No, don't tell me. Show me the 1 page. because we've got to see it on paper. Who's your competition? What are they doing? Secret shop someone. And it doesn't have to be super unique. You can be doing something just a little different than your competition and blow it up. By the way, did you hear of Lowe's and Home Depot? It's okay. You don't have to be unique. There could be two of something. Number 3, you're going to determine my capital needs. Am I going to have to borrow money from someone or partner with someone? You could be borrowing from a bank, an angel investor, someone that wants to get you. An angel investor means they don't want their money back. They just want to help you. It could be grandma. But you're going to borrow money from someone or an institution, or you're going to look for a partner. Stay away from the I word. Investor is a dirty word. Investor means give me money and I'll give you something if I make anything. Invest in my business. You lose their money, you're going to jail. That's an SEC problem. You don't want to look for investors and make promises you can't keep because you get in trouble. You want to say, hey, do you want to loan me money? And I will pay you back X in interest. That's a lender. It's a note. You borrow money, you pay them back. Or, hey, do you want to partner with me? Don't call them an investor. Say, do you want to partner with me? You want to give me 10 grand and you can be a 20% partner, 30% partner? That's what they're doing when they go to Shark Tank. They're saying, give me money to help me launch this business and level up. Now, if you need it. So I'm saying third step in this process is decide if you need money. You may not. A lot of service businesses, you don't need extra money. I started a janitorial business back in 1992 when I was started to go to college, and I ran it for 6 years and sold it for a profit. I had 25 employees at one point. I was working in the middle of the night as a janitor. It took me $500 to start the business. I went and bought a vacuum, a wet dry vac, and a mop and a broom, literally. And I started knocking on commercial doors saying, I'll clean your building at night. And I just built a business that way. Sold it for $50,000, to be honest. Is what I sold it for at the end of the day, and went off to law school. That was a janitorial business. I didn't need investors. I didn't need partners. I didn't need to go borrow money. Your level 1 side hustle is you're saving money to be the capital you need to launch your level 2 side hustle, where you can duplicate yourself a product or service. Now, step 4. Step 4 is you're going, okay, Mark, I got my idea. I've got my business plan. I decided I don't need money or whatever. I've got the capital to do this. I'm going to go sell that piece of crap boat in my backyard, or that RV I never drive, or I'm going to go sell this in my garage, or I'm going to sell something to get this launched. Step 4, structure. Now I'm going to go to the whiteboard. You really have 2 options on this, and it's okay. Don't think again you have to run out and go set up an LLC. You might. We're going to talk about that. So get structured, because you can't build wealth if you don't build a structure to build upon. So option A and B. Option A is ghetto. We're just going to do a sole prop. We're not going to go worry about an LLC. We're going to use your social security number. We're going to just start marketing it. We're going to test the product. We're going to make a little money. We're going to just make a little, and we're going to see how it goes. We don't need to rush out and get a formal thing going if it's just, we're just going to test out the idea. And I kind of like this idea because I don't want to spend a bunch of money getting organized if we're just in kind of that product development, focus group level. I'm going to just try this out and see how it goes. If you get any traction at all, we immediately go to option B. Option B is where you're going to set up an LLC in the state where you operate and live. Now, I'm going to maybe launch that into an S Corp down the road, but that's later. I just want a basic LLC in the state where I live. Now, be careful going online and click, and I'm just going to go set it up and watch Google and I will tell you, my little law firm is very affordable and helps clients around the country do it right and ask a bunch of questions of a real tax lawyer on Zoom for a Main Street business owner for around $1,200. But if you want to go knock it out for $400 or $500 on some online site, go for it. Be careful. Make sure you check all the right boxes. And it's not just one sheet of paper. Well, Mark, I can do it at the state for $50. Yeah, that's about a tenth of an LLC. There's a lot of pieces. You got the new BOI report to FinCEN, has to be done in 90 days. You need an EIN, you need a corporate book, you need a bank packet. You got to go to the bank and open up an account, get it done right. All right, so you've got this LLC, you're going to get an EIN, like I said, and you're going to go get a bank account, and you're going to start getting the platforms in for payment. You want to set up your Stripe, your Square, your whatever, Zelle. You're going to do all the things you need to. And by the way, as a person, you can get money on Zelle, but you don't tell them it's your business. But anyway, you start getting all these payment platforms in place, your bank account, your EIN, your bank, your LLC, and you're going to look at your URL. What is your website name? I want your website to coincide with the name, maybe, of your LLC. We always want to be looking for our URL on GoDaddy at the same time we're deciding on our business, because we're ready to launch. We got to have all this structure in place. Now, is there going to be more than that down the road? Sure. Maybe we build some corporate credit and we start getting our logo down and we start designing our website and all this. But to me, this piece brings us to step 5. Step 5 is the marketing plan. And in the marketing plan, you're going to decide on the logo, the website, your colors. Are you going to do paid ads or not? What are you going to do with social media posting and social media platforms? And you're also going to talk about your local market. Is there networking involved locally? How are you going to sell? How are you going to onboard? How are you going to bring in your clients and make your sales? So you've got this whole marketing plan that evolves, it grows, it evolves, it changes. It's okay that it has change. It's okay. So I carry my marketing plan around with me everywhere. So this step of getting structured could be super simple, or at least enough to open the doors. Like, I want to open the door and start making money. So if I can get these 5 steps down, let's repeat these. I've got my level 1 side hustle. Level 2 is where I'm going to make the real money. Number 2, I'm going to do a business plan for that level 2 idea. Number 3, I'm going to determine what the capital is going to be necessary to launch this, and if I even need partners or where I'm going to get the money. Level 4, I'm going to get structured. Now, I may do some market testing, staying as a sole proprietorship. I don't need to go out and spend for any legal or any banking or any major structuring. I'm just going to kind of test out my idea, secret shop it, if you will, amongst your competition. And then the real structuring before I go to level 5 or basic step 5 is I'm going to get my structure done. An LLC, a bank account, an EIN, the payment platforms, and then boom, go to the marketing plan. And in the marketing plan, we're going to start checking off all these boxes. The last thing I want to say is, do not feel like you have to do this in the next 3 weeks. Don't compare yourself to anyone else. Compare yourself to you. There's no rush. It is not a race. I want you to love this idea. I want you to be passionate about the process. I want you to be excited about this. If you're having anxiety waking up every day about this, you got the wrong approach. You know, I've got to do this. I don't want to do this. This is terrible. This is miserable. I hate this. Then don't do it. Let's find the thoughts that give us the right feeling. Like, oh my gosh, this idea is great. I have unlimited potential. I could make more money doing this than working for someone else. I could supplement my day job in a powerful way. I could build wealth. I could build a future retirement. This could be really exciting. Think of all the new people I'm going to meet. Oh, do I have to be perfect at it? No. Do I have to be super successful at it? No. Do I have to do it right away? No. Is there any pressure? No. You're the only one creating pressure for yourself. Think about the mindset you want to go into this with. That's half the battle. Setting up an LLC and tax write-offs, follow me. I got you. I'm doing this constantly. I got books, I got podcasts, I got videos. I got a tax pro network of accountants that'll help you. It's this stuff that matters. on what you're going to do and believing in yourself, taking your time and going at it in pieces and parts. Now I'm going to do another this is step one. This is part one. Part two, which may be next week, it might take a couple of weeks to let it percolate for some of you, is I want to do scaling your side hustle. See, once you get this launched, that's one thing. But how do I hire employees? How do I expand? How do I grow? How do I scale this? That's a whole other set of tools. But let's just get the damn thing up and going. Let's make some sales. Let's figure out our product, our service, our pricing model, and work out the system a little bit. It's okay. It could take you several months to do that. It could take longer. It could take less. That, my friends, are the 5 basic steps to get your side hustle launched and cranking. The number one tip in saving taxes, and I'm going to throw down, I don't know how many, I'm going to freaking rock it today. I'm going to throw down as many as I can. I've got a multiple list here. I've been just figuring out what I want to cover. But the number one tax strategy that I have been saying for years is that you've got to have a little side business somewhere in your equation. Now, I know some of you are like, well, Mark, you don't know. I am so busy. I work 50 hours a week already at my W-2 job, or I hate having a small business. You're just trying to create more work for me. People, hear me out. Put your guard down for just a moment. When you have a side hustle, you're generating additional income that is oftentimes tax-free for the first $10,000 to $20,000, because I've got enough write-offs that we can chew that up. So now you're making tax-free money that can be used to pay off debt and then used to build passive income. I don't want you to have a side hustle to drive a nicer car, have a bigger house. Let's use our day income. If you're married or have a significant other, let's use our combined income to pay our bills and live within our means. But if you have a side hustle, that is the gateway drug to being wealthy, because that side hustle might turn into a medium hustle and then a big hustle. And then you get employees involved, you let it scale and you watch it run itself maybe, or you sell the business. Or if you're generating enough cash flow, you're using that to plow money into real estate and other investments that is making you money while you're sleeping. Now I'm going to hit 10 write-offs for you side hustles that you have got to be thinking about before you file your tax return for last year. Many of you, they now estimate almost 50 million Americans have a side hustle. I've seen estimates as high as 50% of working Americans, certainly 1 in 3 Americans before COVID. There are so many people running a little side gig just to make ends meet. I want us to shift that perspective and go, if I'm working so hard just to make ends meet, I need to be making more money with my main hustle, or I need to expand that side hustle so that I can use some of those profits so I don't have to work too hard in the future. So here are some of these strategies. Many of you have already got a 1099 from last year. You've been driving Uber, maybe delivering DoorDash. Maybe you sold something on eBay or on some sort of affiliate fee. Any 1099 you might get. And some of you are like, well, they didn't give me a 1099. You still have to claim it. You will get audited. It is illegal. It is tax fraud. You think, well, they just paid me cash. I don't have to claim it. Who told you that? Whoever told you that, you handcuff yourself to them when you get arrested. People, you have to claim the income you earn as a small business owner. And it's okay. I want to give you 10 write-offs here that you can use to whittle that 1099 down to nothing. Maybe. Depends on the amount of income and your lifestyle and where you live and how you're doing it. Okay, let's go through it. It's funny. I was just talking to a financial advisor today that inherited 400 new clients, and he's been looking at their tax returns. And he said, Mark, 90% of the tax returns I've been looking at have no home office deduction. It's crazy. And he's like, well, I talked to this accountant who was like, well, yeah, well, my client has a day job. They work for a brokerage and they have an office there, so they can't write off the home office. Have you ever heard of the admin office exception, which has been on the books now for almost 8 years? People, there are so many ways to write off home office properly and ethically, honestly, and aggressively. Do not listen to an accountant that tells you the home office is a bad write-off. So we're going to do home office. Now, by the way, I've got videos, articles, and books on all these topics. I could unpack home office for the next half hour. We're not going to do it. I'm going to give you a list. Number 2, cell phone. Such a great write-off. The IRS rule, as long as I can show I have a separate phone for personal use, maybe even a phone plugged in the wall at home, or I use my significant other's phone for personal, your phone can be 100% write-off. And when I say cell phone, I'm talking about the case, the charging cords, the phone service, anything related to that phone, that is going to be a write-off in your side hustle. Now, if you say, well, I use it for my home phone too, my personal phone, then let's cut it in half. We're going to take 50% of your cell phone costs. Number 3, I want to write off auto. Auto is such a great write-off. If you use your auto 50% or more in business, and you have to kind of look at your mileage and what you're doing, 50% or more on your auto, you can take actual, which means you're depreciating the car, you're writing off fuel, repairs, and maintenance. The rest of the time we're doing mileage, and mileage is great. You can write off mileage on multiple cars that might be in your household. You can write off mileage on your RV, write off mileage on your motorcycle. If you use it for business, it's a freaking write-off. Number 4, dining. Oh my gosh, I love writing off dining because with a side hustle, you're going to meet with potential contacts, clients, partners, vendors, maybe even with your significant other on occasion. We're not going to write off Little Caesars every other night, but when you go out to a nice restaurant, what do? You talk about business. So we're going to write that off. Dining is a great write-off. Do not shy away from it. Number 5, travel. Love travel. I was just talking to my son Dylan here. We're headed to Miami for the Grant Cardone 10X conference here next month. So excited to go. He puts a great conference together. That is business training. We will be writing off that trip. When you go to conferences, when you go to travel and look on your on your rental properties, meet with customers, meet with clients and partners and vendors, that's a write-off. You can write off 100% of your travel and only 50% of your dining. So you got to be on it, which I just love. Number 6, I want to throw in kind of those equipment and tools. Based on the type of business you have, equipment might entail cameras, tripods, fans, lighting. I'm just looking around my studio here. It may involve drones or anything that you might be shooting social media video with. Also, you might be in more of a kind of a construction or service type business where I'm writing off everything at Home Depot, tools and supplies and equipment and air compressors and toolboxes and all sorts of goodies. So whatever your business is, you're going to be buying equipment over and above what you would be using as or calling typical office supplies. We want to be writing off equipment. All right, the next one that I think is so critical, I'm going to put it right in here now. So I'm going to say family members. I know some of you have kids, some don't. Some of you are single, some of you are married. But the point is, if you're helping any family member out financially, and it's easy when you start talking about kids under age 18 and over age 18. If you have a side hustle and your family's helping you at all, quit paying taxes and giving your kid money for t-ball, music lessons, dance lessons, or school clothes. Pay them for helping you in the business. And it can be very, very legitimate to pay kids as young as 6, 7, 8 years old who are doing office cleaning or stuffing envelopes or helping out at the rental properties, picking up garbage or mowing lawns. When you get your kids involved, you're going to take a write-off for giving them money. I love it. It's a great write-off. And if they're under age 18, you don't have to issue a W-2, and they do not pay taxes on the first $13,000, approximately, the standard deduction this year, in most states. Some states have a lower standard deduction. Lots of strategies there. I've got additional reading material, but I want to put family on the list. The next is I want to put medical on the list. Medical is a big deal, and a lot of people don't realize you can write off medical expenses. They think it just happens. Young people are like, well, my medical expenses are write-off, right? No, it's not. You've got to find a way to write it off. The HSA, the health savings account, you don't have to have a small business, but the HRA is a way to write off unlimited medical expenses. This is copays, deductibles, eyes, dental, physical therapy, chiropractic, acupuncture, anything, prescription drugs. That all falls under what is called the HRA, or Health Reimbursement Arrangement. You have to have a small business to do it, and a lot of people miss out on that write-off. It's just so powerful. Now, next on our list is I want to just kind of get into, I'm going to stick with the insurance issue because health insurance is a write-off in a small business. Also, uh, any other insurance policies you might be paying for your business. We want to be looking at your expenses like accounting, legal, insurance. These are all things that are going to come into play in a small business that a lot of people don't realize. Well, I don't pay for my employees, so I can't write it off. Oh, no, you can. You can. So we're going to look at kind of professional fees and make sure that we're getting a write off for all of those. The last thing I'm going to just throw out for fun, and these are just top 10. I've got a 25-point strategy checklist of my ultimate tax strategy deductions on my website for free. You can get over to markjkohler.com, click on my download my ebook. It is free. And I'll just, all you're signing up for is my weekly newsletter where I send you more strategies. And there's 25 over there. But number 10, and oh my gosh, it just escaped me. And what was I saying? My number 10 was, you know what? I'm going to just throw down 10 as real estate. I'm going to use real estate. There's so many on my list. Just trying to think of my top 10. Real estate's an important one because real estate is a tax deduction waiting to happen when you talk about depreciation. And so if you have a small business, are you paying rent to anyone else? Could you own the building you're renting? Could you buy a little rental property, a single family home or a duplex? And then when you partner with others to buy a rental, it's just as buying a rental yourself. Don't think you have to be rich to buy real estate. I want you to take that side hustle money and be buying real estate because the write-offs that come with real estate are unparalleled. It is the number one asset class out there for building wealth. And I'll just give you two quick reasons why. Number one, you can use leverage. If I take 100 grand, I can buy $100,000 of stock, or I can use that 100 grand and the bank's money and on a 20% down loan, buy a $500,000 property. So I could go buy a 4 or a 6-plex for 500 grand, or I could, even though I only have 100,000 in cash, or I could just buy paper for 100,000. Leverage is such a powerful tool in real estate. And the Dave Ramseys of the world may go, oh, you're using debt to buy real estate. Yeah, real estate that makes money. I'm not using debt to buy a new car. I'm not using debt for student loans. I'm not using debt to travel around the country on a cruise ship. I'm using debt to make money. Productive debt is very different than credit card debt. So don't go sucked into that argument. Number two, what's awesome about real estate is you can tweak it with small efforts and increase its value dramatically. Just slapping a coat of paint on a rehab can increase the value exponentially. Going into real estate and finding ways to save money can increase the value, where if I just buy paper, I can't increase the value of my Walmart stock. I could shop at Walmart, but I'm not going to move the needle. But if I buy real estate, I could stop by there and put in better lighting. I could paint, I could do some landscaping, and I could increase the value of the property 10, 20%. That's a pretty powerful strategy. So there's 10 that I need you thinking about right now. A couple other strategies I want to throw out before April 15th. Do not forget you can contribute to a health savings account. $38.50 if you're single, $77.50 if you're married or head of household. You can contribute to your Roth IRA, and that money grows tax-free. $6,500 if you're under age 50, $7,500 if you're 50 or older. You can put money in a Coverdell. That's like a supercharged IRA for college savings. It's huge if you're a parent. You could do a 401k, a SEP, or simple. These are kind of little retirement accounts that you can add on top of an IRA in your side hustle. So these retirement accounts are super powerful in a side hustle to just throw money into them and get a tax deduction or Roth growth. Now, I probably should have put that down as number 10, but again, real estate was so powerful. People, so many options. There we go. Now I want to mention a couple things about crypto. In fact, I'm just going to have fun here on Siri. How much is Bitcoin trading for? How much is Bitcoin trading for?
Bitcoin US
$67,507. Woo! Wow, right? Well, they estimate again over 50% of Americans own some sort of cryptocurrency. Well, I want to forewarn you that cryptocurrency is taxed when one of three things happen. Number one, I think you all know this. I buy a Bitcoin for 40 grand, which just a month ago, it was in the 30s. But if I buy a Bitcoin for 30 something thousand a month ago and I sell it for 67,000 today, I pay tax, right? It doubled in value. I'm going to pay tax. It's called capital gain. Now, if I trade that Bitcoin for Solana, I'm on my MetaMask wallet, I'm in Coinbase, I'm whatever, and I trade my Bitcoin for Solana. Do I pay tax? Well, Mark, I don't, because I just traded it for another crypto. Yeah, you pay tax. When you trade Bitcoin for Solana, it's like a sale. It's like me selling Walmart stock for Tesla stock. Well, Mark, I still own stock. Yeah, but you sold your Walmart stock. Same point, you sold your Bitcoin, now you have Solana. So whatever you bought the Bitcoin for and whatever you sold the Bitcoin for to buy Solana, that's going to be taxed. So whether I sell Bitcoin or I trade it, I'm going to pay tax. Well, number three, I could take Bitcoin and buy something. Isn't it pretty cool now? Some restaurants all over the country and others are taking the Bitcoin as payment. At our law firm, we take cryptocurrency as payment. If you want to pay us to do an LLC for you or a corporation or anything, state plan structure. So using Bitcoin in a transaction is also taxable because it's as if you sold it. You're like, well, I didn't sell it. I just used it to buy lunch. And that's selling Bitcoin. So how do you deal with this? I know some of you may be freaking out, me telling you this, because last year you were doing all sorts of transactions in 2023 in multiple wallets or on exchanges. You have to get a software program to just track it. Now, CoinLedger and TaxBit are my two favorites. CoinLedger, I was just logging into it before I started this live just to make, and I was like, oh, I already have a password. So what you do is you can upload your wallet and your transactions into CoinLedger, and it'll prepare the tax forms for you and tell you exactly how much you owe in taxes for last year. People, the number one question, literally after your name, address, and social, your number one question on the 1040 tax return is, did you buy, sell, or trade, or otherwise dispose of any form of cryptocurrency? That's the first question on the tax return. If you click no, that's perjury. You can go to jail. If you click yes, what do you think they're going to be looking for? Your transactions. Well, Mark, I don't know how to track them. Get the freaking software. So I would recommend CoinLedger or TaxBit. There's 15 others out there. Upload your transactions for last year and do your taxes that way. You're like, Mark, oh my gosh, my taxes, I was going to do them this weekend. Yeah, you might have to extend your tax return. It's okay. When you extend your tax return, you actually reduce your chances of an audit. Now, you still need to send in what you think you're going to owe, but it's okay, people, if you extend your tax return on April 15th so you can do it freaking right. It's okay. The mega backdoor Roth. Now, this is a big deal, and it's a strategy only the wealthy use. And it's really important you understand that you don't get overwhelmed if you cannot put away as much money as you'd like to in your Roth IRA, or you're not sure how to invest it once in your Roth IRA. I will help show you that it's a progression. It's a journey. The more money you make, the more educated you get, the more successful you're going to be. Everybody that's wealthy now didn't start out wealthy. They all started out with the same dollar amount in the bank, generally. Now, maybe some people inherited it, but they had to build it. That's the American way, and you can do it. The Roth IRA is a structure that does not have to be in Wall Street assets. It does not have to be in stocks, bonds, mutual funds, and ETFs. You can invest your Roth IRA in real estate, notes, crypto, oil and gas, syndications, your best friend's restaurant they're opening up, your sister's bake shop. You can put it into products that you want to sell online. There's so much you can do with your Roth IRA to get a big return. That's part of the key here. But to make money, you got to put some money in the tank first. You got to fill the tank with some gas, and then we start building it. We start building it. Now, that's the key to the mega backdoor Roth. Because if I want to take my regular Roth IRA, and I've been running numbers here for a bit before we started today, and I'm going to teach you the mega Roth IRA. But the first level is just doing a basic Roth IRA. I do it. I have my kids do it. I tell every one of my clients to do it. Their friends and family do it. This year, you can put $7,000 in a Roth IRA if you're under age 50, $8,000 if you're 50 or older. And that's at any income level. Do not get sold, well, I make too much money, I can't do a Roth IRA. Yes, you can. It's called the backdoor Roth IRA. And I have a link to that down in the description below. The backdoor says you're going to put money into traditional and convert it to Roth on the next day. So you can put money into traditional at any income level, not even get a write-off, and then convert it to Roth on day 2. And since you didn't get a write-off, the conversion is tax-free. People, wealthy people, put money in a Roth IRA every year. It's called a backdoor Roth. So get that off the table. Don't listen to anyone crazy that says you can't do it. So level 1 is we're going to put money in a regular Roth IRA. Now, want to know how the wealthy do it? We start putting more than that into our Roth IRA. And we start investing it in more strategic ways. Now, just so we have a baseline, if you take a regular Roth IRA and put in $7,000 every year, you don't even put money in a 401k, you don't save money in any other retirement account, just in this one Roth IRA, you put $7,000 in a year. It is going to take you 27 years to have $1 million tax-free. So if you're 30 years old and you start putting $7,000 away every year on a 10% rate of return, you're going to have $1 million at age 57. That's it. Not bad. Sounds great. And the longer you leave it, the better it gets. I mean, we can have fun with this. If I say, well, Mark, I'm a 20-year-old and I want to know what I'm going to have at age 57. Oh, okay. So now you're going to have 37 years to kind of play with it. So you're going to start now at age 20, put $7,000 in a year, invest it in S&P 500 ETF. You could start getting more creative down the road. But let's say we get our 10% return. And then every year I put in that same 7,000. That's it. I can stick to that 7,000. Okay, here's the number. I want to show you what you got here. $7,000 will give you at age 57, $2.7 million. If you start at age 20 and just put $7,000 away every year for 37 years. Now, I know that's hard. 20 years old, like, I'm going to live forever. And 37 years, I don't care about that. This is how the rich get richer. Just start practicing it. I'm working with my kids who are in their 20s, funding their Roth IRAs every year. I'm going to ask the guys in the group in the room here. You guys done your Roth this year? No? Yes? Okay, we're 50-50 here in the room. These guys are in their 20s. I'm proud of them. We're shooting 50-50 in here. We got to work on this. You're in trouble. All right. Okay, so $7,000 a year is baseline. Now, I promised you in this video, I'm going to teach you how the wealthy do it. So if you're making money online, you're making money somewhere in a business, selling a product, service, whatever, and you're making some good money, please, I beg of you, do not go out and buy a freaking Range Rover or a BMW. Don't go on trips all around the world every year. Don't go buy some mega house, mega apartment and blow money like it's water. Can you please consider what I'm about to show you? With the mega backdoor Roth, under age 50, you can have $1 million tax-free in 7.5 years. 7.5 years, not 27, 7.5 years. But it requires you to use some self-discipline and not spend every freaking dollar you make and start plowing it away right away. So I want to show you how this looks in a little diagram here. This is the mega backdoor Roth. I'm going to call it the mega Roth because if you make more than a couple $100 grand a year, you're going to have to do the backdoor method. Doesn't matter. We're just going to call it the mega Roth. It starts here. If you are under age 50, or then we're going to have different numbers. If you're 50 or older, okay, then we're going to have a different model. So if you're under age 50, this year you can put $7,000 in your Roth, and then your 401k. If you have a day job where you work at and they give you a 401k, you can put $23,000 in there, and you can choose to have it Roth. That's how it works. You're going to put that away, and boom, done, 23,000. Plus, you're going to get a match from the company. Cool. Now, the next thing you do is it's called this is what the rich do, an after-tax employee contribution. And you can do another $46,000 minus the match you may have gotten down below. Because the total you can put away, when you add this whole thing up, the total that you can do is $76,000. Now, if you put $76,000 in my calculator, 10% rate of return, 7.5 years, you're going to have $1 million tax-free. And my clients are doing this. I have clients with $10 million Roth IRAs. You can do this. I know it sounds like a lot, but if you have a business that's successful and things are rocking, don't go buy a bigger house for 7 years. Live lean and mean. Pump the engine, pump the primer, get the snowball going down the hill, getting more snow, and let it continue to grow. I'll even just throw that out too. If we do that same amount every year, and let's run the numbers here, $76,000, and I do it for the 7.5 years, we have $1 million. Let's say you just do it for 15. You're like, Mark, I can keep it up. I can do it for 15 years. $3 million. You only did it for 7 more years, but the money went up by $2 million because your money will double over time. It's called the rule of 72. So anyway, that's the power of the Mega Roth if you're under age 50. Now, let's go to the next age group for those that are 50 and older. So this year you can put $8,000 in a Roth IRA, and then you get to, I'm going to go over my other slide here, $31,000 in the regular 401k. Now, if you have a small business, you might do a solo 401k. And that's fine. Whether you have employees or not, you can put away $31,500. And that leaves you a remaining $45,000 to do this after-tax contribution. I'm going to give you a story here of some oil workers that you're going to love. After-tax employee contribution, you convert it to Roth on day 2, because if you're 50 or older, this year you can put away $84,500. So if I do $84,500 versus the $76,000, it only takes 6 years, 0.75. So 6 years, 9 months, I got $1 million tax-free. That's how it works. Now, let me tell you where, I'm going to be totally honest here. I want to tell you where I learned this. I've been doing this for 25 years. We had some oil workers. These guys are working out of trailers up in South Dakota. And the employers up there recruit these guys. Are tough. They're grizzly. They're up there, big biceps, and they're working on these oil rigs up in South Dakota. And they provide housing for them. They feed them, the whole 9 yards, because they don't want to live up there anyway. So they have to entice them with free housing and room and board. And they get these big freaking 6-figure paychecks. Well, these guys, they can only party so much on Friday and Saturday night in the local town and then get back to work. So they're like, what do we do with our W-2? We don't need the money right now. These guys are all in their 30s and they're just cranking up there. Well, several of them were clients of ours that we had from an Oklahoma relationship. And we were doing some tax planning with them. And they said, hey, look at my Roth IRA. I'm putting away $76,000. Now, this was about 5 years ago, but the numbers were a little different. And I'm like, what the hell? I mean, I get the contribution, the 23, and I get the 7. How in the hell are you doing another 45? And they go, oh, Mark, you didn't know? They said, if you do an after-tax employee contribution, what that means is you go to your HR department and you go, hey, I can put up to 69 grand in my 401k. So you have 76 when you add your Roth, but it's 69 grand in your 401k. Anybody this year could put 69 grand in their 401k. And you go, well, the employer's not going to match it. That's right. You can call up your your HR department and say, I want to put 46,000 in. And they go, okay, you don't get a tax write-off for that. See, because you can only do your initial contribution for 23,000 this year. But they call up and go, yeah, I want to do the extra 46 grand. Just take it out of my paycheck every month because I don't need the money. I'm living in a trailer. So they're like, take it out of my paycheck, that extra 46 grand a year. And they go, you don't get a write-off. That's okay. Because on day 2, they called them back and go, hey, would you convert that to Roth IRA? You can convert as much as you want to Roth anytime you want. But since they didn't get a tax deduction, there was no tax to convert it to Roth. So at the end of the day, they had 76 grand sitting in a Roth IRA. I was like, holy crap. Matt Sorensen and I are talking on the phone. He starts writing. He was in the middle of writing his book, the first edition, and he's like, I got to throw this in here. And we've been helping clients ever since. It's crazy. It's called the Mega Backdoor Roth if you make too much money, or the Mega Roth if you're under the limit. So anybody can do it. You just got to have that small business feeding the engine. So my friends, that's it. If you want to know how to build $1 million as quick as possible, there's two pieces to the equation. Get in as much money as you can and get the best rate of return. Now, on the best rate of return, I want to say a couple things, and I'm here to field your questions. Any of you with questions on Instagram, Facebook, Twitter, YouTube, throw in your question. I want questions about the Roth IRA and saving, 401ks, investing your Roth. Let's keep to questions on the topic, please. If you just call up Fidelity and say, I want to invest in an ETF S&P 500 fund, your average return is going to be between 8 to 10%, which is not bad. This is what Warren Buffett's been talking about. Tony Robbins has been talking about this. Just go to an ETF S&P 500. Boom. Don't get all funky, trying to trade it. Don't worry about, I don't know what stock to buy. It's called an exchange traded fund S&P 500 index. Okay. I'll just do that. Just throw your money in there and let it ride. You're going to average 8 to 10%. Now, if all of a sudden your buddy calls up and says, hey, I'm opening up a restaurant down the street and I'll give you 20% ownership. You throw in 50 grand. Well, what do I get for 20%? Show me your numbers. What do you expect to make in profit? Oh, dude, you're going to make a 20% return. Now, if you trust your friend and you trust the restaurant, by the way, a very risky business industry. But let's say you're like, yeah, I can do it. It's the next best thing to slice bread. It's like the next Five Guys. You're like, all right, I'm in. You drop in your 50K and you get a 20% return. Ooh, now what's our rate of return? Now that's 76,000 with a 20% return. What? Okay. All right. Let's do a 20% return. How quickly can I get my 1 million tax free? Wow. 5.5 years. 5.5 years, I have 1 million tax free. See, because your rate of return snowballs faster. So if you can invest in something, you might invest in short-term rentals, promissory notes, getting a 12% annum, 2 points in interest. You might invest in oil and gas, crypto. You're like, I'm going to go buy some crypto. That crypto goes to the moon, you pay zero tax. All drops into your Roth. Boom, bada bang. So that's how it works. So start putting money away and then start self-directing. If you want to know more about that, go to our Directed IRA podcast. I have a podcast with millions of downloads. Directed IRA podcast, it's down below. And you can start learning how to self-direct. At the Directed IRA Trust Company, we are setting up accounts every day. You can do it online on your freaking phone and set up a Roth IRA and start funding it. And just start with the basics. I said this at the very beginning of the video. Don't beat yourself up. Just start with $600 a month. It's a big car payment, but that's your future. Start now.